begin the week, potentially by Wednesday, Tuesday, later Tuesday, maybe even Wednesday. We'll be watching that one very closely. But again, going into the short crossovers, I would imagine that the short-term crossover is going to support what I'm saying here. Now, looking at the short-term crossover, it's getting ready, I think, to cross to the upside, but it's still having some problems. So the other indicators are supporting it. So again, we'll be watching that one very closely, but I have somewhat of an upward bias on Euro US to begin the week after one more pullback. Now, looking at Australia US dollar, we can see we're also starting to get a base down here around this 81 level. Now, again, the predicted true strength indicator from Vantage Point, a very fresh cross right here in heavily oversold territory. I cannot stress enough that this is when this indicator is the most powerful. So when we look at past calls from this, looking at this crossover here on the true strength indicator in reverse, this one's to the downside in heavily overbought territory. But if we look up here, we went from the 94 area all the way eventually down to the 81 area. So that's a huge, 1,300 pip move based on if we were only to use just the predicted true strength indicator along with the triple EMA and nothing else. So that's a very powerful move. Now, when this thing is getting ready to do it in the opposite direction, this suggests to me that we're probably going to move and start challenge and look to challenge again the 86 level or potentially even higher. We've closed at 84.75. We're probably going to again get one more push to the downside with a little further US dollar strength, what I've talked about in the US dollar index, and then we should see this thing go screaming higher. and again, remember, the Australia US dollar is a high yielder, so the high yielders always, the market is always looking to get long the Australia dollar just for the carry trade, if nothing else. So if we take what I've said there, and if we take into consideration what I've discussed about the the yen contracts, there's your carry trade. Now, the US dollar also is applicable, in my opinion, to a carry trade because of the low interest rate and the interest rate differential between the two countries. This tells me that we could be gearing up if the FX, starts to calm down, if the equities calm down and start to reverse back up again, then Australia US will absolutely follow those equities. But I cannot stress enough that the equities play a big part in the direction of which way the Australia US dollar moves. Now, we've looked at the main currency pairs. Now what we're going to do is we're going to go back here and look at a couple that we missed, specifically US CAD and Great Britain US. I'm just going to pull that back up so everybody can see. Now, we've got this base here that's formed at 142.50 area. My concern to begin the week is that we're going to get into a pullback again because we've hit this 18-day predicted moving average. Again, the reason why putting up the triple EMA crossover like this with the candlesticks very clearly shows what's going on. We've hit some resistance. It's failed in this area. We can see that the close at 144.64. We got to a high of 146.12, and then it just collapsed straight back down. Now, the thing that's interesting here is that these other indicators from Vantage Point, specifically the predicted MACD and the predicted TSI, are still showing that it's rolling over to a buy. So unless we get a sustained break of this base at 142.50, I'm suggesting that we buy the pound dollar on dips, much like what we did last week, very much the same as what we did last week. So again, we want to continue to buy on dips. I would expect that we may see a pullback towards this 143.50 area. We can use that this week as a buying opportunity and have our stops below the 142 level. Now, that's our British pound. Now, going into our final pair here, we're going to go and look at the US CAD. And US CAD looks very similar to the pound dollar here. It's come back, hit a high, and then come all the way back down and close the week out above the 18-day predicted moving average, which comes in at 104.46. Now, if we look at the range, this is not a coincidence. Our low for Friday's trading was 104.45. It hit this level and then proceeded to bounce 100 pips off of that area. So while we had good selling up here, there also appears to be some pretty decent buying off this 104.46 area. But again, to look at the week, These other indicators from Vantage Point they're in heavily overbought territory, and they look to be getting ready to make that crossover to the downside. When that happens, which I believe it will, US-Canada will push much lower. Now, in order for it to do that, the one thing we will be looking at is our crude oil contracts to support that. So with that said, we're going to have to go in here and look at the light sweet crude and see what's going on. Light sweet crude, I want to point this out, that the medium term difference is heavily overbought. Now, before we go too much further with that, the long-term predicted difference is not. It's sitting at 0, which is trend ready. So we may get a little bit of a pullback on crude oil contracts. I'm suggesting probably towards this 72 area, the 8-day predicted moving average from Vantage Point, and then we're likely to push much higher. That's what I think is going to happen here. We've got the 3-day crossing over the 8-day predicted moving average. That in itself is a buy signal. And now what we're going to be watching is to see is if we can continue to build on this strength. Now, with the medium term predicted differences overbought like this, a pullback is perfectly normal. So we don't want to panic here. What we want to do is let it make its little pullback towards this, likely towards this 72 area. And when it does, that's when the US CAD pair, when crude oil starts moving higher, then we can look to start buying the US, or excuse me, start selling the US CAD currency pair, because the correlation is again about 90%. It's very high. Now, with these crossovers taking place like that, that's what's giving me the confidence to not only recommend these trades, but to actually enter them myself. So, and that's a big part of it. And again, looking at some of these trades from last week, this was a very looking at light sweet crude, I actually took a little bit of heat on this one, guys. A lot of people thought I was nuts putting out buy signals on crude contracts when they're looking on TV, and I'm saying the only thing I'm looking at, I'm using Vantage Point essentially as my own market analyst, and it's telling me that this thing is oversold, that the downside in the crude oil contracts are going to be very limited, and that's exactly what happened. And I got a real nice, an $8 move on crude contracts, $8,130 on a single contract. Very nice move on the future side. So we definitely want to take those things into consideration. So again, this is the Forex weekly outlook for June the 1st. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.